Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, October 18th. And again, another day of, as we mentioned, this week is going to be pretty volatile. A lot of economic news releases scheduled for today. So we're going to take a look here at the PPI, which is the Producers Price Index. This is inflationary numbers. Pardon me there, I jumped ahead there. Inflationary numbers for the wholesale side of things. So this is basically what the wholesalers sell to retail or consumers will pay. So it's not the most important thing, but it's something to watch out for. The last reporting was 0%. We figured it would jump up a little bit, like 0.4%, and we had a whopping 0.8%. So that's a huge increase. But let's take a look at the core, and that's really what we look at because we wipe out the food and energy, which is actually real volatile, can create a little volatility in there. And so we have a 0.1%, so we figure it'd be about the same, and it went up just slightly up to about 0.2% here. So core made the number look a little bit more palatable, but if we had that 0.8% even at the core PPI, watch out. So because inflation could be, a concern there. So right now it's contained at 2.2%. And the next one here is home builders index. So we have 14 there, so not a great number, obviously, and we figured it wasn't going to change, and it actually jumped up to 18. Not where we need to be at, but actually, at least it's going in the right direction. So home builders are feeling a little bit more optimistic about things, so we may actually start seeing some maybe future building in the near future as they're feeling a little bit more optimistic. So now let's go ahead and jump into the headline news. We got the stock markets up today, and talk about France credit rating be downgraded. We had that discussion earlier this past summer, and it looks like it's being brought up again. So, and then also China's economy is slowing down. Get this, 9.1% for Q3. It went from 9.5 in Q2 down to 9.1. Where U.S. is, we're lucky to be right about 1% rate up now. But again, we're talking percentage on like two, three times what China's economy is. So uh, even 2% is not bad, 1 or 2%. So in that case, so let's go take a look at what the bond market's doing. Since stock market's doing well, let's take a see what the bond market and what the interest rates are doing. We're actually having a decent day. We had a nice low rally, about 40 basis points. We closed upwards here, as we can see, and we have a little bit of a trend upwards. So depending on where this lies, if we go upwards or if we go in a sideways motion, but right now we're up about 6 basis points for the day. We're up a little bit. As we can see, we're getting the star effect, so this could easily sway either way. Uh, Dow, with the loss that they had yesterday, looked like they're pricing the euro crisis into theirs, but bonds with we should have with all the news that was going on and the correction that the bonds or the stock market was having, we should have a lot more of a rally here. So it doesn't look like we really had the pricing for the euro debt concern in the bond pricing as of yet. So what does that mean? That pretty much translates that once they do, we could really see the bond market kind of tank, go downwards, and rates will go up. So that's what that really actually means. So we could see a nice little rally coming up here, maybe even up to the 102 level, as we had, previously I was at 103, so we may not reach those levels again, but at least down to about 102, I would suspect, uh, in there. So hopefully this continues the rally upwards. And as of yet, interest rates are a little bit better today compared to yesterday. And stay tuned. And here's what I have to offer for you folks, especially those who don't, are having some issues with their credit and don't know where to begin. So take a look.